evening, savvy savers and curious investors. Welcome to Capital Market Live on Channels Television. I'm Will Ibong, and we're here to unpack the market moves and economic trends in a way that makes sense for all of us. Now, how did your investments fare this week, and what economic shifts should you be watching? We've got insights for you here on Capital Market on Channels Television. Before we zoom in on our local market and economy, let's take a quick tour around the globe. Here's what's happening in the financial world that could impact your bottom line. First up in Europe, we see markets in Europe close higher on Friday, rounding off what's set to be a winning week for global stocks. Now, the Pan-European Stocks 600 index closed up 0.31% to record a weekly gain of 2.4%. Auto stocks recorded the biggest sectoral gain, adding 1.06%, while oil and gas stocks lost 0.15%. Now let's check in on Asia. We see Japan stocks led gains in Asia on Friday to notch their best week in 4 years after Wall Street rallied overnight as fresh economic data eased recessionary fears. Now, Nikkei 225 jumped 3.64% to cross 38,000 for the first time since August the 1st. Now, Hong Kong's Hang Seng Index was up 1.88%, while mainland China's Shanghai rose 0.07% to close. We zoom in the U.S. markets to see the stocks rose on Friday as investors closed out the best week of 2024. The S&P 500 added 0.2% to close at 5,554 points, while the Nasdaq gained 0.21%. And Dow Jones also rose 0.24% on Friday. Now, for the week, the S&P 500 added nearly 3.9%, its best week since November 2023. The Nasdaq gained 5.2%, while the 30-stock Dow advanced 2.9%. Back home, the domestic stock market reversed last week's gain as profit-taking activities gained momentum following strong sell-offs in Bois Cement, which was down 13.5%. That dragged the index down. The all-share index declined by 1.51% week-on-week to close at 97,100 points, with the month-to-date and year-to-date returns moderating to 0.7%. And the month-to-date is in negative territory. Year-to-date is now at 29.9%. Similarly, activity levels dropped as the trading volume and value declined by 24.1% and 1.4% week-on-week. On the other hand, performance across the sectors was mixed following gains in the oil and gas, insurance, and consumer goods indexes, while the industrial goods and banking indexes settled lower. Leading with a 33% gain, we see RT Briscoe topping the gainers chart for the week, while Qtix PLC led the decline in stocks. The trio of GT Co, Veritas Capital Assurance, and Japol Gold top trades by volume. Now we're going to be digging down to the numbers, seeing the facts behind the figures, and we have Mr. Kofi Garba, is a non-executive commissioner at the Securities and Exchange Commission, SEC, honorable member, Investment and Securities Tribunal, as well as the MD and CEO, APT Securities and Funds Limited. Good to have you on the program this evening.
Happy to have you.
Let's kick off first with the NGX. We saw that weak performance for this week. Was it what you were expecting this week?
Well, naturally, when we are in the month of August, we expect things to go down because investors do sell more of their shares in preparation for their students for registration for the new session. So there is more demand of money, and most of the elite and the middle class have their children in their private universities, and they need more cash. So there is more selling than. And in most cases, you will see that the index go down, the share also prices go down because there is more sellers than buyers.
Okay, so let's just zoom in very quickly. Something very phenomenal happened this week. We see the federal government saying that its dollar-denominated bond is going to be issued on Monday, that's August the 19th, set to raise about $500 million and is going to be selling to local and foreign investors. And this is the first of its kind. I just want to know, what do you make of this?
Well, truly, the Nigerian has been crying for that. Because of the devaluation of Naira, Nigerians want to invest in the hard currency. And that is why you see a lot of Nigerians trading cryptocurrency and the forex trading. So now they have an alternative. You can invest locally and in the dollar-dominated currency. This will attract more funds, and I believe that the DMO and the federal government will be surprised by the massive bidding from the general Nigerian investors. The only thing we wait to hear, are they going to allow Nigerians to invest in Naira for the dollar denomination, or they want Nigerians to invest in dollar? This is not yet clear, but in any way, in other way, I trust Nigerians will beat this, and they will get beyond what they asked for. It's for the first time, but I have no doubt in me that already the investors are asking, can they invest in the hard currency? Now this is an opportunity, and I can assure you that it will be overwhelming.
You're speaking of overwhelming. We know that it's going to be listed on the NGX as well as the FMDQ, so it's going to be accessible to a variety of investors, a whole lot of investors. But the minimum subscription is $10,000. How many Nigerians in this current economic situation can cough out $10,000 to participate in this first of a kind dollar-denominated bonds that the FJ is rolling out?
You see, this is an investment for the capitalist. I assure you, this is just a child play. The member that will invest into this will be surprised. And you will come and see by the end of this offer how many people subscribe for it. I have no doubt in me that these 500 million is going to be oversubscribed.
Okay, let's look at the yields now, maybe the interest rates that the government is going to be pulling out. We've seen inflation dropping now for the first time in 19 months to 33.4%, dropping from 34.19%. That's for July. Is this now, and now everybody's going to be watching out to see what the Central Bank of Nigeria is going to do. Are they going to hold rates? Are they going to cut rates based on the fact that we see food inflation also tapering down? Inflation is gradually moving downwards as predicted towards the second half of the year. Do you see interest rates still being enticing to be able to draw the necessary investors to get the necessary bonds, especially for the dollar-denominated bonds that we're talking about here?
The interest is enticing. Just last week, they closed the federal government saving bond. What was it? 17 to 18%. It was seriously subscribed. So now you are talking of the inflation coming down. The margin that the inflation goes down, what I expect the minimum from the CBN is by the time they hold for their MPR meeting to at least retain the MPR. Or if they can do payable, they go further down. That will help and achieve what they want to achieve, because they want to bring down the inflation down as well as the MPR rate. Because with this high rate, you hardly get any manufacturing sector borrowing at this rate, because you cannot. How much is you making that you can even borrow at 31%? This is on the high side. We want the interest rate to go at least below the 20 digit. And if it goes that level, you will see more expansion, more manufacturing company borrowing into the bank, and that will increase employment, and that increase productivity, and everybody will be happy. Because if you employ people, they will earn a living and they will spend, and you will see that generally the GDP will be much higher and better than what it is today. So we expect them in the next MPR meeting to at least remain flat for the rate, or they go further down.
It's a good thing if the Central Bank of Nigeria lowers the rates or holds rates, because this is going to help the economy, especially for high interest rate. Borrowing costs will be reduced, especially for businesses. The real sector is really biting hard on them. But we're talking about those who benefit from high interest rates in the bonds, in the debt market. So if the rates are lower, how many people are going to be participating in government bonds? You see, how many people are going to be participating in the Euro bonds?
The beneficial are very few. And therefore, if the interest rate goes high, only very few benefit from it. But when the interests go low, majority of the people benefited. You will see a reduction in the prices, you will see more productivity, and you will see generally, you will see more activities in the economy, and the economy will be better. So I have no doubt, when the interest rate is low, you will see the majority benefit from it, and you see more activities. So therefore, when you are looking at the number, to be low interest rate is much better than high interest rate. The high interest rate only go to the very few, maybe middle class and high class. And what do they constitute? They don't constitute between 5 to 10%. Then compared to the 90% that will benefit with the lower interest rate.
So let's look very quickly at some other activity that happened last week, not this week. Providus and Unity Bank merger. It's the union. Several banking analysts have been surprised at this union. A lot of people have called it, described it. I just want to know, is it a well thought out union? Because this is the first time, the first merger in about 5 years since we had Access Bank and Diamond Bank come together in 2019. And even within the central bank, even offering bailout money, so, and especially that Heritage Bank did not get the same, benefits.
You see, that is why we say, please don't hold it alone, share it with the people. Who owned the Heritage Bank compared to who owned the Unity Bank? Unity Bank is a PLC company, and not only PLC company is a stock that is listed in the Nigerian exchange. Remember, before the Unity Bank, about 9 banks merged together into Unity Bank. And all those ones were merged, what we call statutory merger. The government have seen it that they cannot survive. They say, okay, instead to have nothing, why don't you have part of it? They all merged together. 9 banks merged to form a Unity Bank. And now Unity Bank, because of their negative shareholders, the government or the Central Bank of Nigeria decided to call what we call statutory merger. This is not the merger based on the wishes of the investors or the shareholders of the company. It's the merger called by the regulatory body based on their status given to them, and they decided to say, look, instead to close down, merge within so that you survive. And the beauty of it is that the investors, the depositors, they all survive with it. I like Heritage. The Heritage is owned by very few individuals. And don't forget, it's a limited company, not quoted, and therefore, with the heavy negative shareholders, even before the closure of the Heritage, the writing is bold enough for you to read. Most of their branches closed because they cannot meet up the demand of the depositors. And if you go through online, you cannot get it through. If you use their ATM, it will fault. So therefore, it is very clear to all and sundry that Heritage Bank will not survive. So allowing it to go down on that, it is okay, because 90% of the depositors, they deposited less than what the NDIC can pay. And NDIC have said it that they have paid them through their BBN. They identify where they have the account and they pay their money directly. But for the Unity Bank, it's a quoted company. A lot of people invested in these shares, and it's a Heritage Bank. Don't forget that the Unity started from the Bank of the North. And the Bank of the North is the bank that have been existing for over 50 years. And in addition to that, about 8 banks merged with it to become a Unity Bank. So for the CBN to say, look, merge with Providus Bank, I think it's a good one. And don't forget that the Providus Bank is a limited company. Now being merged with the PLC is either likely going to Providus Fund, settle the shareholder of the Unity Bank, or they may decide to allow the Unity Bank to remain as listed, and also they list their own shares into the Unity Bank and start trading on the exchange. Don't forget, some of the shareholders of the Providus Fund are members of the capital market. So I expect the latter that they may likely allow it. In any way, the Nigerian exchange have foreseen that one and suspended the trading on the Unity Bank until everything is clear for all.
I was going to ask of what is going to happen to existing shareholders of Unity Bank, but you kind of like touched on that now. So what if the Providus banks decide now to join or maybe like have shares? Are they going to merge their shares together? Because the Providus bank is not listed. But what if they now decide that they want to put out more shares out there? How's that going to look like? Just a quick picture.
I expect Providus Bank to be listed. The reason is very obvious. The Unity Bank has just 12 billion shares. 12 billion shares, when you compare to the other bank, most of the bank, the list is FCMB that have 20 billion. But the rest of the bank, they have over 30 billion. Even bank like Jaiz Bank, they have over 30 billion shares. So what does it mean? The Providus Bank can decide to list their shares, merge with it with the exchange. There is still more room for that. And the existing shareholder of the Unity can remain as they are. And that will be better for the market and better for the shareholders.
Fantastic. We'll take a quick break now. Capital Markets will continue right after the break. Stay tuned. Welcome back. Now, the Securities and Exchange Commission, SEC, says it is working hard to fix the problem of unclaimed dividends in Nigeria. Unclaimed dividends, as we all know, are monies from investments that people have not collected. The amount of unclaimed dividends have grown to 215 billion naira as of March this year, which is a big problem. To help solve this, the SEC says it plans to set up units across the country to make it easier for people to claim their money. They're also using new technology to find the owners of this unclaimed money. The SEC made this known on the sidelines of the Capital Markets Committee meeting held this week. Let's note that on July the 30th, the Senate had issued a 6-month deadline for this issue of unclaimed dividends to be resolved. Mr. Kofi Garba, CEO, APT Securities and Funds Limited, is still with us in the studio. Now, Mr. Garba, the issue of unclaimed dividends has been described as a monster in the capital markets. What is the real root cause here, and how do you see this setup of units helping to clear this backlog? How effective do you think they will be?
Well, I think if we want to address this issue, we have to separate the legacy issue and the current issue. What do you mean by the legacy issue? The legacy issue, these are the shareholder of the estate account. Today, what we have in the capital market, if you want to manage the estate account, you see hell. Because each of the registrar will demand a certain amount just to verify your letter of administration. So assuming you invested in 20 companies with 20 different registrars, each registrar demand between 10,000 to 20,000 to verify the same letter of administration. It makes most of the investors to run away from managing the estate. And shares of the estate account, they keep on lying down and keep on increasing with unclaimed dividends. That is one. The other issue are the shares of the unknown. We have shareholders that even the family are not aware of it. But now, with the wisdom of the website that provided by the Security and Exchange Commission, many people Google and see that their relatives and their parents and their grandparents have outstanding dividend. With this, we are hoping that it will bring up the attention of so many investors to deal away with the legacy issue. Why should a current investor should have an unclaimed dividend? For me, there is no reason for that. For the last 2 to 3 years, federal government's DMO has been issuing federal government saving bond on monthly basis. They have no unclaimed dividend, and they don't have any registrar. The reason is very straightforward. Before you invest, you have your bank account, and when it is due for, the whole money will be given to Central Security Clearance System, CSCS, and CSS pay you instantly. And therefore, there is no issue of this. There's something with the FGN's cook. If you look at the FGN's cook, there is no unclaimed dividend. Why? Because they have no registrar, and when it is due for the paying of the rental, the whole amount is given to Central Security Clearance System, and they pay it instantly. So where are we having this issue? We are having issues because the registrars are not aligned with the synchronizing with the data of the CSS to make life easier. But with this, we hope that the SEC will come out with the issue that will address the issue once for all and let us not hear the issue of unclaimed dividend. If you go to across the world, there is no issue of unclaimed dividend because before you invest, you have bank detail. So why should you have unclaimed dividend? Even if you are late, the dividend should go to that account.
I know you've spoken a bit about it, and I agree with you. Well, in terms of the fact that we are in this current era, we shouldn't be having issues of unclaimed dividends, especially when we have the BVN, the NIN, all the biometrics, all the identification that is needed to identify a shareholder. So, but why do we have to still fill out the e-mandate form? You see that shareholders don't get their dividends because they are required to go pick up a form, go to the bank, and go through the rigorous process like we are not in a digitalized economy.
In a digitalized economy, you don't need to fill e-dividend. Your details are there in your account. So why should the registrar ask for e-dividend? They have your bank, they have your BBN. And BBN is restricted to one. Today, if there is any identity that we can stand and proud of, is BBN. Nobody has multiple BBN. I have not seen one. And every other person has only one BBN, irrespective of the number of accounts you open with various banks. So with this, the registrars have no excuse whatsoever to say they are not paying you. We see this is happening. I can tell you, me as an investor, I have a registrar where they pay me a peanut. The bulk of the shares, they say that I didn't pay the e-dividend. I challenged them. I said, what e-dividend do you want after you have my bank account and BBN? I think the regulators, particularly the SEC, will better of time come with the P that anybody failed to pay, as when do you pay a price? And once you get this, you will see that everybody sit up. Why should they pay you certain amount and hold a certain amount telling you for e-dividend? Must you pay e-dividend for every investment you do? In a day today in the digital time, I can invest in 20 companies. Tomorrow I can sell and move to another 20 companies. So I will end up paying e-dividend for each stock I invest. The question is no. This is uncalled for and is unneeded. What is all need to do, go and update your CSS account with the BBN and bank account. Having done that, you have given all the rudiment for the register to derive from there and pay your dividend. And failure to do that will make sure that they come out with something that whoever hold anything, you must explain or otherwise pay a fee. And when this is released to the market, you will see that the issue of unclaimed dividend will be just the matter of history, only for the legacy account, which there is little we can do about it.
Just very quickly, because we're running out of time now, just get your thoughts. And now, following the Capital Markets Committee meeting that was held this week, and you know, these are one of the issues that were discussed. But what growth direction do you see for the capital market, seeing that the PMI, the recent PMI from the CBN showed that there was a decline in July, and also we've seen the weak market performance from most stocks, except for the oil and gas sector. And what future holds for Nigerians? What future do the Nigerians have for the rest of the quarter, the third quarter, and the remainder of this year?
I believe the future is very brighter. Having seen that, the new board of the SEC just inaugurated in the month of July. But they have started acting right from the month of toward the end of April. Today, from May to August, they have approved 9 issues, which was not done in the past. So what does that mean? It shows you that if you are willing to come to the market, you have got those who understand the market ready to do the bidding. So that gives you a better and future brighter for the market. As most of the board are people that know the market. So therefore, they know the problems. They don't need to be told. We are there, we have seen it all, and we'll come out with the measures that will make sure that it works, and we give the capital market or the operators all what they need so that we move better and faster. Remember, the president promised that he wanted a $1 trillion economy, and the capital market will be the first front leader in making this realizable. And therefore, I have no doubt that the future of the capital market is brighter with the current board. And I can assure you, all other issues that are not on the board will be brought to the board to make sure that the market moves beyond where we are today.
I'm very hopeful and optimistic about the future there. The outlook for the capital markets really looks bright, especially with what's going on. But we're hoping that inflation numbers continue to taper down and businesses continue to thrive, having low cost of borrowing to be able to help them propel and get that $1 trillion economy bouncing back. Thank you so much, Mr. Kofi Garba, MD and CEO, APT Securities and Funds Limited, for sharing your perspective on capital market this evening.
Okay, thank you for having me.
So we go on now. The Youth Entrepreneurship and Leadership Academy, that's Yella, seems determined to expose the young ones to all aspects of empowerment for the future. And now, consequently, Yella, working with the Nigerian Exchange Group, has facilitated the visit of the 2024 graduates to the trading floor to get a feel of transactions and activities there. After a tour of the trading floor, the students are given tips on investment and living.
There are just certain steps when you're investing. You have to have an established goal. It's very, very important to have an established goal when you invest. What do you want to invest for? You should have a purpose, you get. And there are different instruments. The younger you are, the more, like they usually say, your risk appetite should be higher. But when you get older, you want to minimize your risk, right? And then you should also gather data. And that's the essence of why we are here. If you don't have knowledge, you will not understand investment. That's the truth. You need to have knowledge. You need to understand how does investment work. And this is why NGX, part of what we are doing is to create awareness, how important it is for us to have, investment. Another is that you should evaluate your current position. People like to live above their means. That's the thing. I think you have to be very realistic to try not to live above your means. Say whatever you have at the moment, even if you're a student, I'm sure that your parents, in one way or another, gives you pocket money. There are people who they give much more than others, and even if you're working, I'm sure that you have some sort of funds. You try to live according to, your net worth. That's what I would rather say. Yes. And then, implement your plan. Always have a plan. Always have a plan and implement your plan.
Very good advice there. Live within your net worth. And that wraps up another edition of Capital Markets. Remember, whether the markets are bullish or bearish, knowledge is your best investment. Keep watching, keep learning, and keep growing your financial savvy. You can watch this again on our YouTube channel. I'm Will Ibong. Thanks for watching, and see you next week.